Greetings guys, I welcome you in this wonderful video. So I'm going to be sharing with you how to use the stochastic oscillator in trading forex. So what you need to understand is that firstly we have three different kind of market move. We have a downtrend, we have a range, and then we have an uptrend. So I'm going to be sharing on how to apply this indicator on these three scenarios. So firstly, what you need to know about this indicator is that it is a momentum indicator. It was created to show you the momentum of the price in terms of overbought and oversold. So these are the two things that it is going to show you: overbought and oversold. So what is overbought and what is oversold? So firstly, what you need to know is that overbought, it is actually doesn't mean that price is going to go down, and oversold doesn't mean that price is going to go up. So oversold, it is whereby it is telling you that okay, now we have a lot of sellers that have came into the market. Averagely looking at the market move on an average view, now we have a lot of sellers. Same thing applies in overbought. Looking at the market overall, we have more buyers which have came in. So when price, or when the indicator here, the stochastic, when it is above this dotted line, we have these two dotted lines. We have this one on an 80 level, and we have this one on a 20 level. So this one on the 20 level, it is the one which marks the oversold. So it is oversold, and here it is overbought. So when this indicator is up here, it actually means that the price at this current state here, it is overbought. And here, when the indicator is down here, the price at this current state, it means that it is oversold. So now how should you apply this into your trading? So the most important thing which you have to note, it is the one that I highlighted here, that overbought doesn't mean that you should sell, and oversold doesn't mean that you should buy. So now here is how you should apply it. So as a momentum indicator, you need to know that momentum usually goes first before the price. So when it comes to this indicator, that's why it is classified as a leading indicator. Why? Because it leads the price. It doesn't wait for price to do something, but it does something before even the price can act, meaning the stochastic goes before the price. That's why it produces what we call divergence. But I'm going to make a special video about divergence, and I've already made one from the past, so I will put the link in the description. So it produces what we call divergence because it's a leading indicator. So meaning it can tell you that now I am going down, yet price is still going up. So that why it is classified as a leading indicator. It doesn't depend on the price. It doesn't depend on the price itself. It analyzes and it plots data itself, data which doesn't correspond directly with the price. So one can look at the price here and say, no, this price here is not overbought. Why? Because it is like half of the previous one. So how can you crown this as overbought? But itself, it analyzed and it told you that okay, now price is overbought. So because of that issue, that's why you have to treat this indicator as a signal or as a warning indicator. You should treat it as a signal or as a warning indicator, meaning if it tells you this issue that okay, now price is overbought, it actually means that now be ready that any time from now price will go down. It doesn't mean that price is going down immediately, but it tells you that any time from now price will go down. Why? Because we have a lot of buyers that have already came in. So that's what it is telling you. So it is actually just opening your eyes that if you were looking this market on the buyer side, be careful, because now the buyers have overcrowded the market. So they have we have to see sellers coming in. So that's what it means. And another important area where you can use this indicator, it is actually detecting your close. It is actually closing your running trades. For an example, let's say in this scenario you've bought this market, maybe based on your own analysis. You've pressed the buy button earlier in this state here. So now, because the stochastic is overbought, it is actually telling you that now you can close your trade. Why? Because anytime from now the sellers can come in, because the market has to move, and if there are a lot of buyers, the market won't behave. So for the buyers to produce something, they have to buy something from the sellers. So if it's only buyers, it can't work. That's why we have both greens and red candles, because if we have buyers, where are they going to buy from? They have to buy from the seller. So that's why we have to see the sellers coming in and also the buyers coming in, because it's an interaction between the buyers and the sellers. That's why it forms the forex market. It's buyers and sellers in the game. So you can use it to close your trades. You can use it to confirm when you open your trade. For an example, if the market is moving up, you are going to say, okay, I see it's an uptrend, but before I press the buy button, let at least the stochastic be close to my oversold zone. Then I will press the buy button. Why? To avoid the error of buying here or buying here or buying up there, because immediately when you buy here, the market collapse against you, collapse against you, collapse against you. So it will help you in that scenario. That is how you can apply this indicator into your trading. So thank you for watching this video. Remember to like, share and subscribe. Thank you.